Hello and welcome back to our channel AU Study Group. This is Swapnil. Today we are gonna do some practice question and answers, practice MCQs for business economics. Part 1 we have already done. This is part 2. Let's start. Which of the following is an example of an economic activity? A mother cooking for her family, volunteering at a charity event, a teacher giving a private tuition, or a friend helping another friend move out. Which one is the right answer? Which one is an example of an economic activity? What is the right answer? A teacher giving a private tuition. That is an economic activity. Good. Let's move to the next question. An increase in the consumption of goods along an indifference curve results in what? A decrease in the level of satisfaction, a shift of the indifference curve, no change in the level of satisfaction, or an increase in the level of satisfaction. What is the right answer? Yes, it is no change in the level of satisfaction. Let's move to the next question. The law of variable proportion states that the marginal product of an input increases indefinitely. As more of one input is used, total output decreases. As more of one input is used in production, the marginal product of that input will eventually decrease. Total output remains constant. What is law of variable proportion? Third one. As more of one input is used in production, the marginal product of that input will decrease. Next question. In the context of production function, returns to scale refers to what? A change in output resulting from change in one input, the returns on investment in production, a change in output resulting from a proportionate change in all inputs, the scale of production in a factory. What is returns to scale? What is it? The change in output resulting from a proportionate change in all inputs. Very good. Next one. Internal economies of scale are. What are internal economies of scale? They are cost advantages that arise from the expansion of the firm itself, cost advantages that arise from industry-wide expansion, disadvantages that arise from firm expansion, advantages that arise from external factors. What is the right answer? What is internal economies of scale? It is cost advantages that arise from the expansion of firm itself. Next one. The concept of cost output relation primarily deals with what? The output level at which costs are minimized, the relationship between the cost of production and level of output, the relation between different type of costs, the output level at which revenue is maximized. What does cost output relation deal with? The relationship between the cost of production and level of output. Very good. Next one. In economics, cost function refers to the relationship between cost and profit, the function of cost in determining demand, the function of cost in determining supply, the mathematical relationship between production cost and output levels. What does cost function refer to? What is it? The mathematical relationship between production cost and output levels. Fantastic. Next one. Which of the following best describes economies of scale? Reduction in per unit cost as the scale of production increases, constant cost regardless of production scale, increase in total cost as production increases, increase in per unit cost as production increase. What is economies of scale? Reduction in per unit cost as the scale of production increases. Very good. Next one. External economies of scale are associated with what? Cost advantages that accrue to firms as the industry grows, disadvantages due to external factors, advantages due to government policies, cost advantage specific to a single firm. What is external economies of scale? What is it? Cost advantage that accrues to firm as the industry grows. That is external economies. Next one. The law of variable proportion is also known as the law of diminishing returns, the law of increasing returns, the law of variable cost, the law of constant returns. What is the other name for law of variable proportions. What is the right answer? The law of diminishing returns. Very good. Let's go for the next one now. In the context of market structure, perfect competition is characterized by what? Sellers producing differentiated products, a few sellers with significant control over price, a single seller dominating the product market, a large number of buyers and sellers with no control over the market price. What is perfect competition characterized by? Large number of buyers and sellers with no control over market price. Good. Next one. A monopoly market structure is characterized by many sellers with no control over price, single seller with significant control over price, many sellers producing differentiated products, a few sellers with some control over price. What is a monopoly market structure? What is it? Single seller with significant control over the market price. Monopoly must. Okay? Right. Monopolistic competition is a market structure where a few sellers control the market, single sellers dominate the market, many sellers offer differentiated products, many sellers offer identical products. What is monopolistic competition? Monopolistic competition. It means many sellers offer differentiated products. Okay, good. Next one. In an oligopoly market, the market is characterized by what? A single seller dominating the market, many sellers with no control over price, a few sellers with significant control over the market price, many sellers producing differentiated products. What is oligopoly market structure? Few sellers with significant control over the market price. Very good. Next one. One of the main features of perfect competition. What is the main feature of perfect competition? Product differentiation, barriers to entry, homogeneous products, or price discrimination. Which one is the main feature of perfect competition? When do you call it a perfect competition? Which is the right answer? Homogeneous products. Okay? Right. Next one. A key characteristic of a monopoly is, what is the key characteristic of monopoly? Many sellers competing in the market, no control over price, barriers to entry that prevent competition, perfect information. What is one of the characteristic of monopoly? What is it? Barriers to entry that prevent competition. Very good. Next one. Monopolistic competition differs from perfect competition primarily because of, what is the difference between both? Absence of barriers to entry, homogeneous products, product differentiation, or large number of sellers. What are the primary differences between these two? Monopolistic competition and perfect competition? Product differentiation. Very good. Okay, let's look at another one. Oligopoly markets are often characterized by what? A large number of sellers, interdependence among firms, absence of barriers to entry, homogeneous products. What is the characteristic of oligopoly market? Perfect, you are right. Interdependence among firms. Okay, now this is basically the next one. In perfect competition, the demand curve faced by an individual firm is perfectly elastic, perfectly inelastic, upward sloping, or downward sloping. What will be the demand curve? Yeah, you are right. It is perfectly elastic. Right. Now this is the end of part 2. Okay. Thank you basically for watching this. Do like, share and subscribe for more. Okay. We'll add up more MCQs